Happiness is freedom. Freedom is having the choice to spend your time doing things that inspire you. Most people want freedom, but many people don't have a clear objective, a roadmap, or a strategy to achieve it. Everyone deserves to live an inspired and free life. I believe that when we're free and able to focus on our most meaningful work, we simply become better human beings. We can give more, care more, support more, and love more. I'm an investor, a trader, and an entrepreneur, and I get to spend every day doing what I love. At the age of 29 years old, I became financially free, and since then my mission has been to help and inspire other people to achieve the same so that they can be more of who they really want to be. Always Free is about having a free mind, being free to question the status quo, free to take risks, free to say no, free to say yes, free from social idealisms, opinions and beliefs, free to disobey, and free to wake up every day and spend your time to make a difference that inspires you. You can have it all. Living a life designed by you isn't a stroke of luck or a result of circumstance. It's a choice. So if you want to learn how to become free and live an inspired life, join me for the #1 show for financial empowerment and wealth creation as I share my insights, tips, strategies and advice on what allowed me to be always free. Welcome to the show. I'm your host, Jason Graystone. Welcome to the podcast, guys. I hope you're doing well. Today you've got a very special guest, Callum Laing. Thanks for coming on.
Thank you, Jason.
Great. This is quite a change of scenery. We're in a big caravan on the water. Just kidding. We're on a nice, lovely yacht in Dubai, and been spending the last few days talking about acquisitions, talking about what's been going on in the market, where the investment opportunities are, and as always, I want to share whatever I learn with you guys and whatever insights I can share. And Callum's a great guy to share some expert knowledge with you. So Callum, just give everyone a brief intro of who is Callum Laing.
Yeah, so I've been an entrepreneur for about 25 years, and basically starting, building, growing, and ultimately buying and selling businesses. And for the last 10 years, I've been working, sort of using the capital markets to try and connect all of the investor capital with all of the small businesses and entrepreneurs in my network, and try and figure out the best ways to reconnect the capital with the people that create the value.
Yeah, right. And how's it going? Because on my YouTube channel, for instance, I put out a video about like this massive disconnect in the market, and I noticed that when you was doing your talk, you basically said the same thing. And you know what I loved about it is you started uncovering all of the causes for some of the suggested causes for what's been going on. Alleged causes. How is it changing, and what's the vibe right now?
The sad thing is I don't think it's changing.
Right.
Look, I think what you were talking about a couple of years ago is as prevalent now as it's ever been. So I think, we oftentimes it's kind of the entrepreneurial dream is that you'll take your company public. And we had that dream and that aspiration, and we took our own companies public, and then we started helping other companies public. And what we discovered is that the capital markets have changed beyond recognition from the original purpose. And they're now, I think I used the term cesspit. It's not what most people expect. If you're an entrepreneur, you take your company public, you kind of have this dream that people will get behind your story and they'll buy your stock and they'll hold and they'll have the same aspiration as you to grow and create value. And actually there's this huge value disconnect between what entrepreneurs and small business owners are trying to do in the world and what most investors are doing. And it's also, and I know you're a big proponent of kind of actual investing, but the capital markets are not designed around actual investing. They make their money by getting as much trade as possible. And so you've kind of got that happening, which is not what businesses want.
No.
I mean, you want an element of it because you want the liquidity, but it's really not the original intention. And I in the presentation I gave on Saturday, went right back to when the Dutch government had given the licenses to the shipping companies 400 years ago, which ultimately they needed money to exploit these opportunities, and so the first public shares of a company were formed, and so the first public markets were formed, and that was 400 years ago. And even Wall Street was 200 years ago, London Stock Exchange 200 years ago. You would have thought they'd figured out how to do it properly and cleanly, and actually what's happened is what they've done is they've spent 400 years working out how to manipulate it. And I mean, some of the things we were talking about.
Yeah, let's talk some of those.
It's going to get me in trouble, isn't it?
Well, I've spoken about like A book, B book trading and things like that in brokerages, and you know.
So I think you're talking about A book, B book. I think the way we refer to that is dark pools, and basically that as an investor, when you think you're buying stock in Tesla or Apple or your local microcap, you assume that your buy order is going onto the market and being matched with somebody that wants to sell. Most of the time it doesn't. It goes into these what we refer to as dark pools, which are controlled by the investment bank, which means that, and basically their view is that let's not deal with the market. We've got buyers in our own network, we've got sellers in our own network, let's just match them up ourselves.
Yeah.
And of course, the problem with that is that nobody can see what's happening. And if they want to front run that, which basically means if they know I'm selling and they know you're buying, they can sit in the middle and take a fraction of a cent off each piece. And Michael Lewis wrote a great book about this, Flash Boys. If you read that, it's awesome. So, and unfortunately, nothing has changed. And so the numbers that I quoted were that in the US, something like 50% of all shares traded appear in the dark pool, and in Europe, it's 20%. You came up to me afterwards and said, no, it's much higher than that.
Well, in certain markets,
So that those things are kind of going on, and you've got, especially when you're dealing with microcaps, which is what we're dealing with, microcaps and small caps. There's great opportunities, but there's also great opportunities to exploit them. And so people front-running orders, people putting in these huge orders to boost the price, or huge orders to sell the price, and naked shorting, so selling stock they don't own. Which
that was like the whole AMC, GameStop thing, right? It was basically short squeeze.
Exactly. And so that came out, and they found like 107% of the stock was being traded.
107.
How's that happening? And then like one of the big car companies came out and said, they'd done a vote, like a shareholder vote, and 113% of shareholders had voted, and it's just insane that it's legal. And look, part of it is pure naughtiness and manipulation, and part of it is that these tech systems are so antiquated, and they're so I was talking to the head of the European NASDAQ about how frustrating we find it trying to just sell stock from one country to another. And he was saying, look, it's just, you've got these legacy systems, and then you've got tech built on top of the legacy systems, and then tech built on top of that. So it's this house of cards that's really not very good. And kind of the sort of the strong selling point for blockchain is that hopefully it could kind of clean all this out.
I believe that when I see it, but
well, I mean, I think that I'd love to see it.
Same.
But there's so many trillions of dollars vested in keeping the system.
It's such a slow move. I can't even see it happening. Maybe in my life, I don't know.
Although my hope is that it could tip quite quickly. But I think there's so much money that is vested in the status quo that it's a tough sell. So
just to touch on for people watching or listening who the whole GameStop thing, you can go and watch videos that I've put on that, but it is the brokers basically selling shares to people that or shorting shares that don't exist, and you end up in a position which we did with GameStop, and you can go and watch that video if you want to. But ultimately, with all this going on, what it creates is not a true reflection of market, price, value. It's disconnected.
It's very, very disconnected, and it's and I think the challenge for most small business owners and entrepreneurs is that they go public, they have these dreams and these aspirations. And look, to be fair, I think there's some challenges on the entrepreneurial side as well. I think the original intention of stock markets was to support the long-term growth, and shareholders buy a slice of the future profits.
Yeah.
But if you Google IPOs, initial public offerings, everything is about exit. And actually, if you listen to entrepreneurs talking, they'll talk about the exit. And if I'm trying to get investment for my startup, I talk about going public for the exit. So what that does is it means that you go public, and then there's this sudden barrage of stock into the market because the founders are taking their winnings and early investors are cashing out.
Yeah, it's like it's a flawed approach to what it was created.
Exactly,
right?
Exactly. So, 50% of all public listings never go back to their original listing price, because you get this flood of selling, and then everyone else panics because the share price is going down.
Warren Buffett says IPO is probably overpriced. I think that's what he says. It's
yes.
And I recommend check out this thing called Wall Street Cheat Sheet. It's a chart that was created based on the emotion of the market and following an IPO. And we've seen it in ICOs, we've seen it in coins. It's exactly the same. If you go and look at the chart of Bitcoin, it is literally mirror for mirror. It's exactly the same thing. It's just the same thing that happens. Which is great for some traders who like to predict certain patterns that happen frequently in the market, but not so good for investors who think, bloody hell, what do I invest? How can I get some long-term sustainability and buy into the future?
Yeah, so I think that the challenge is, so you've got these, I guess maybe naive investors and naive entrepreneurs that sort of believe in the story, and what happens a lot of times is people get burnt and say, look, this is not for me, as opposed to someone like yourself who got burnt some more and then figured it out and came out the other side, which is kind of what we did as well. We got battered and bruised and looked to blame everyone else but ourselves, and
it's much easier.
And eventually said, okay, well look, clearly somebody's making money in this market. Like, for all the corruption and all the odd stuff going on, maybe we just need to figure out what game is being played and who's actually making money in this game. And that's kind of basically what we did over the sort of next few years. And look, of course, there's lots of money being made.
We can talk about some opportunities then. So I think, just rounding that off, there's more people that want to get rich quick than people that want to get rich slow, and that almost creates part of the problem. It creates a lot of the problem. So my question to you is then, and I don't know if you've been asked this, but where do you go for the good opportunities? What do investors look for now? What is the... Because you've seen it all, right?
Yeah, well, so interestingly, most of my work is around public markets and small cap stocks, but I've also sat as High Commissioner for the World Business Angel Investment Forum in Singapore. Not because I do angel investing, just because it's such a cool title.
Right.
But because of that, I also kind of, and I had a tech background, so I've been very involved in the startup space as well, in the early days. And that question of what do you look for when you're investing? And interestingly, I've completely changed my appraisal of investment opportunities now. Whereas sort of most people will answer it's about the team or about the product market fit or the size of the macro environment or all those kind of things. Actually, what I think is more important is what's the motivation of the other investors in the game. So at a very micro level, if you're investing in a startup, are you aligned to the other investors, and can you trust the other investors? Is the founder going to dump at the first opportunity? Is there a venture capitalist in there that really doesn't care about the sort of the long-term game? They're just trying to flip it to the next level. And if you don't understand what games other investors are playing, you can end up being left holding the bag. And it's kind of easier in some regards in small private markets to try and figure out, like, there might be 5 people around the table. Should be easier. In the public markets, you're trying to figure out what potentially thousands of people are thinking. But you do definitely want to know who are the insiders, who owns the bulk of the stock, because if somebody sells for whatever reason, and oftentimes it's very genuine reasons, something comes up, and big tax bill, or somebody dies, or something happens, and suddenly all this stock gets put onto the market, it can completely destroy the price. Equally, somebody big comes into the market and starts buying up, it can transform the price. None of this has anything to do with the underlying business.
No.
And yet, to me, it's the biggest determinant of whether you make or lose money on a deal.
Slightly off topic, we were talking about board of having a board, the importance of having a board. I've been on panel discussions with the founders of a company before, and been in a board meeting where the board were brought in because it was basically like, right, are you going to take this public? What's the plan? And only up at that point, the question was asked, what do you want from the business? What do you want from the business? And they all had, all 3 of them had completely different ideas about I just want more time with my family. I want to just sort off and travel. And one of them, usually it's one of them who's like, no, I just want, it's like my baby. I want to take it to the grave. And if you don't know that at that point, what hope have you got when it's public and you're investing in the market, in the stock?
And I think, so it's one of the things I talk about is the different motivations around how you create value. And look, most sophisticated investors think small business owners and entrepreneurs are complete morons, complete idiots, like the way they handle money, the way they do things. And of course, most entrepreneurs and small business owners think investors are evil sharks. And
sharks.
That was the politest thing I could come up with it. But what it is if you're an entrepreneur, you make profit by creating value for others, and you're constantly sacrificing short-term profit for long-term value. So you land a big contract, and then you go and hire a bunch more people to deliver.
It never ends, right?
It's never ends, and you're always foregoing today's profit for bigger value
tomorrow.
Which is why investors think you're nuts, because investors create value for their investors by making profit. So if they can take profit off the table by selling today, that's what they do. And if I'm an LP in a hedge fund or a private equity, I want them to do that. That's what I want. So you've got this fundamental values disconnect between what should be the most aligned system in the world, business and finance. I mean, it's
such a good point.
It's the same thing, but it's not, and that's where you just get this constant tension. That's there. So.
I think that like you say, investors get a bad name. Ultimately, it's just about the service. What is their motivation? I think brokers get a bad rap just through lack of education on how brokers work. They just want you to trade. They get paid on in and out of your trade. It's not that is their model, and you need them, and they need you, and that's it. Aside from all the underlying, the dark pools and all that kind of stuff, unfortunately that goes on, but I think they get a bad rap for no reason a lot of the time, purely through uneducation of what investing is, what trading is. And that's why I say, don't trade, don't invest until you actually understand order flow, order placement, where your money's going, and you don't.
But this is why your content is so valuable, because where else do they get stuff? And the problem is, if everybody in the market has their own game that they're playing, and if you don't understand the rules, and look, we're all making money, and once you understand the rules, there's a lot of money to be made in it.
So what you're saying about investing, it's about understanding the demand of the investors to then allocate your money in alignment with that. Kind of like a build to sell, built for demand kind of approach.
Exactly. Right. Like if you look at venture capital, venture capital is they have done the best PR to convince the world that they're the smartest people in the room, but most of the time, their returns are
Yeah,
abysmal.
amazing job. Outstanding.
Yeah. But their returns have actually been pretty appalling.
Yeah.
There's a small percentage of them are very, very good at this game. And they're very good because they understand the exit and they're buying small businesses or startups to meet the expectation where they can sell them to. And it's very different from trying to bet on whether it's the right industry or whether it's the right team or all of those kind of stuff. The good ones aren't playing that game. They already, like you said, they're buying to sell. They know where the seller is. Private equity is exactly the same thing. They take it on, they flip it to the next biggest private equity, but they know before they go into the market to buy your company who they're going to sell it to 3 years later once they've combined it and saddled it with debt and fired and destroyed it. And
But I think at least that approach removes a lot of emotion and puts logic into it. So it's like we're building for this purpose. And let's not get too ego-driven about it being a good idea or...
Exactly, and the point is you need to understand the game that's being played. And I think most of the conflict in investing is around timeframes and understanding that actually you could both be right about a stock, one's selling, one's buying. It's because you're thinking in different timeframes. And so I think that understanding the different games that are being played is critical to thriving in this environment.
Yeah, absolutely. So rounding off, this is no means financial advice, as you guys know, but Callum, you're now looking at your next moves. Like, what are some good ideas that people should start maybe looking into, thinking about? How are you thinking? Like, where's the opportunities?
So, look, I think you can kind of read between the lines on some of the stuff that we do. We take companies public. We now have a very good idea of how to play this game and how to deliver investors what they're looking for at the same time as delivering small businesses what they're looking for. The people that always make money are the people behind the scenes. The investment banks. We basically have a boutique investment bank that does all of these deals and always makes money regardless of whether companies go up or down, markets go up or down. But obviously, there's a limit to kind of how many people we can bring in to that. But that's kind of sort of our core business. And really the big picture for us is that we want, there's just this weird disconnect between the capital markets and 50% of the world's economy, which is made up of small businesses. So if we can do a little bit to help connect that, a little bit of a multi-trillion-dollar business is all right.
Yeah, amazing. Look, I highly recommend. I've spent the last few days with Callum and Jeremy and the team and some of the guys in the group, and it's just been so eye-opening. It's always good to hear different angles, different experiences, different lessons and insights. So I'd love to. Have you got any training or anything further that people can go and check out, Callum?
Yeah, look, I think there's you and I can have a chat with some of your more sophisticated investors around some of the products that we've got. If you're just looking for good companies to buy in the market, in the UK we have a company called MBH Corporation, which is a holding company of around 20 small businesses that have sort of grown from zero to nearly £150 million in revenue in 4 years. And
amazing.
Just great, really nice, boring companies like Caravan.
Boring's profitable.
Exactly. Construction, education. But just great companies and paid dividends every year.
I always say you can feed a family on boring.
Exactly.
You can't feed a family on volatility and excitement.
And promise.
And promise. I promise. Excellent. We'll put all the links to Callum's stuff below. Highly recommend you go and check him out. And we'll be doing some more stuff together. We'll be featured in the podcast and stuff. So, mate, thanks for coming on. It's been awesome.
It's a pleasure. It's fun.
Awesome.